Ladies and gentlemen, good day and welcome to Lakshmi Machine Works Limited Q4 of fiscal year 22-23 earnings call hosted by NSDL. As a reminder, please note that participants' line will be in listen-only mode and there will be opportunity to ask questions after the brief by the company officials. Should you require any assistance during the conference call and to raise questions, please signal the operator by raising hands. Please note that this call is being recorded. This is Samir from NSDL. We have with us Mr. V. Senthil, Chief Financial Officer, and B. Lakshmi, Senior General Manager of the company. Over to you, sir.
Thank you, Samir. Good afternoon, everyone, and thank you for joining Lakshmi Machine Works Limited earnings call for Q4 of FY22-23. We'll have a brief about the overall performance of the company for the quarter ended March 23 and FY22-23, followed by the interactive session. I would like to clarify that certain statements made and discussions in conference call will be forward-looking in nature. To begin, let me start with overall performance of the company. Then we'll proceed to the segment performance, then consolidated performance. The financial results have been posted on company's website and hope you had the opportunity to go through the same. I am happy to share that the company has achieved a turnover of 4,457 crores, which is 48% higher than the corresponding previous year. This milestone was achieved by our team with a lot of effort amidst various challenges on material, procurement, logistics, etc. The PBT stands at 485 crores for the current year as against 254 crores for the previous year, which accounts for 91% increase in the profits of the company. I would go into division-wise specifics now. The TMD revenue for the quarter stands at 980 crores as against 967 for the previous quarter, resulting in almost a flat revenue. For the year ended, it was 3,648 crores as against 2,317 crores in the previous year, resulting in an increase of 58%. Currently, we hold an order book of around 5,930 crores and which have been lined up for execution over the current year. As you know, TMD has over the last 2 years performed consistently and we have been able to achieve incremental shipments month on month. With respect to the order book, the order inflow, the project order stands at around 42% of the total order book. Export turnover had increased by 49% for the full year compared to the previous year. The ratio of export, domestic and spares stands at 24%, 65% and 11% during the year. With respect to Q4, few factors have had an impact. That is the unfortunate calamity in Turkey, which is one of the key export markets for us, and the product mix and the domestic machine share has also gone up. Currently, we are running at full capacity, and so our focus going forward will be to continue and ensure that we are able to deliver as fast as possible to the customers. Now going to machine tool division, the turnover of the division is up from 690 crores to 780 crores. We have seen an increased trend of sales of VMC machines in machine tool business, thereby helping us to serve the non-auto sector segment as well. With increase in manufacturing activity, we strive to achieve better turnover going forward. With respect to foundry division, we have achieved a turnover of 96 crores as against the turnover of 78 crores last year, and this registered a 23% increase, and exports in this accounts for 23% of the turnover as well. With respect to ATC, the turnover is at 95 crores as against 39 crores last year, and it registered a 142% growth. The profits have also increased for the current year. And order book for this particular business stands at 400 crores over the next 3 years. I would like to cover our subsidiaries now. First, it is LMW China. With respect to our wholly owned subsidiary, we have clocked a turnover of 232 crores for the year compared to 221 crores in the previous year, registering an increase of 24%. The profit for the year is around 23 crores. Here again, we had quite a few challenges in terms of late COVID issues in China. We have been able to overcome that and it has done well. With respect to our LMW Middle East operation, wherein we have started our shipments from June 22, the company has achieved an overall turnover of around 120 crores and with a profit of around 9 crores for the full year. Here the focus will be on ensuring that we stabilize our operations in LMW Middle East. I would also like to state that during the quarter, we have entered into a joint development agreement with Shobha developers for us to develop the land to an extent of around 5 acres. This is adjacent to the already existing project of Shobha, which we had executed a few years back. And the timeline for completion of this project is around 60 months. And we will look forward to completing this project as well with Shobha successfully. Now we can start the interactive session. Back to the moderator, please.
We would request the people in the attendees to please raise hands if you'd like to ask questions. After communication of your name and unmute status from the moderator, that would be me, you may proceed with the questions. So we would request the people who would like to ask questions to please raise their hands. The first person in the attendees that I can see with the hand raised is Mr. Dhaval Shah. We would request Mr. Dhaval Shah to please turn on your video for the question. You have been unmuted.
Yeah. Hi. How are you, sir?
All fine, Mr. Dhaval. All fine. Thank you. How are you?
Good. Thank you.
Yeah,
yes, sir. So firstly, on the textile machinery division, you mentioned the order book is 5,900 crore. So this is, if you can break up between the live order, the older orders, and how much is the export order book out of this, and also your outlook on the textile machinery division. How do you see in terms of utilization of the capacity? Are we planning to do any expansion here? I mean, since last 2-3 quarters, we are doing well, and we have not thought of any expansion, but have you changed your mind or anything? And secondly, your thoughts on the outlook on this CNC machine division. Yeah.
Okay.
Yeah, these are my 2 questions.
Okay. With respect to the order book of 5,930 odd crores, I think the way it splits is around 600 crores is towards exports. The balance order book is domestic. You can take 600 to 700 crores as exports, balance is domestic. And within domestic, we have inactive order book of around 950 to 1,000 crores is the inactive order book. That is the split of our order book. With respect to how the outlook of it, yes, you're absolutely right. We have been utilizing our full capacities. In fact, even last 2-3 calls, we have also said that our aim is to bring in capex for balancing capacities and not to kind of add en masse capacities, which is practically not possible. And we have done that, and we continue to do that. So whatever balancing capacities we have been able to bring in, we have brought in, and this year also we'll continue to do the same. As we find bottlenecks, we will have to bring in capex into those areas. Capacity utilization is at its peak. We are doing all what we can to kind of reduce the delivery times and ship out as many machines as possible. Coming to the CNC business, two things are happening. I think we expect that generally the market for CNC business, especially with a lot of engineering industry itself is booming. There is going to be a lot of demand. And we are prepared in that sense. Over the last 2 years, we have increased our capex spend for the machine tool business. We have put in our capacities, and we are told even this last time our capacity utilization based on what we are currently rolling out, we still have easily close to a 30 to 40% gap against what we are shipping versus what is the capacity actually which is available. And that is all down to the fact that we have always been adding capacities there, and we have done that. So yes, the outlook for the business is positive. Within that, we also have something product mix of both turning centers and machining centers. The last couple of years, the focus has been on the machining centers, and that's what we are trying to kind of push into the market, and that's where we have been able to, over the last few years, move the mix from predominantly relying on auto sector to making this almost 50-50 or a 51-49 ratio, where 51% is towards non-auto sector machines, which are basically being sold to non-auto sector. So yes, we are quite planned to see that we are able to get as much as prepared to cater to the demand in the CNC segment of machine tool business. Okay. Back to you, moderator.
Thank you so much, sir. Thank you so much for answering to that. Proceeding with the next person who has raised the hand in the attendees, we have with us Mr. Aditya. Sir, you have been unmuted. Can we have your video turned on for the question, please? We can hear you.
Yeah. So in our ATC division, we have seen nice scale up this year. So just wanted to understand what factors or things have to work for us to help us scale our revenues in this division to 400 crores, as we mentioned, and how confident are we in achieving the same?
Can you repeat that, please?
So in our ATC division, so we have mentioned that we would like to scale this business to around 400 crores. So just wanted to know what factors or what things have to work out for us to achieve this kind of scale up in the next.
What I meant is we have order books. You see, basically these things work on what we call long-term order, and we have order books in this particular business for where we have visibility for 3 years with around 400 crores of orders in line, which needs to be shipped out. We don't require much because we have already invested capex in this particular business. For these shipments, it will only be, it's not a huge capex. Because 400 crores over the next 3 years is also close to 120 odd crores of existing, kind of a rollout. That's what it is. But yes, within this, capex is a substantial composite is a substantial business which we should plan to grow. And for that, we will require capex, and we'll be investing capex for a period of time as and when we see the potential in this business.
Thank you so much, sir. Thank you. Proceeding with the next person on the list in the attendees, we have Basrur and Varun, probably jointly connected through the same device. Can we have your video turned on for the question, please. Sir, you have been unmuted.
You're audible, Mr. Varun.
Good afternoon, sir. Thanks for taking this question. So I've noticed that the order inflow has slowed down a little bit over the last couple of quarters. Your commentary here, this is with regards to the textile machinery business. So second thing is, as you said, you've been doing some balancing capex in this business to sort of improve the execution. How much more of this can be done? What kind of peak revenues do you see on a quarterly basis given your order book? And third question is on the machine tool business. You talked earlier about some supply side issues on availability of electronic components. How is this situation now? And what kind of utilization ramp up are you seeing over the next year or so? Thank you.
Okay, I think it addresses a wide range. So yes, you are absolutely right. I think the order inflow of TMD has over the last year tapered. If we actually look at the numbers which you have put out there, the order book has shrunk by close to 900 odd crores. Of course, we should also take it from the view as to what was happening the year before was a huge surge in orders, and at that point of time we did mention that a lot of projects had come through in the order book, and almost everyone had kind of, whoever wanted to invest had already planned for investment. So ideally, we are quite happy to see whatever the orders which have come through also now, even though the order book has shrunk a bit. Going back even further a couple of years, the surge was on account of two reasons, right? One is post-COVID demand. One is even pre-COVID there was very less investments happening within the textile sector, and that has changed over the last 2 years. So whilst we don't, it is very difficult for us to expect the same amount of order flow year on year, because that only pushes your delivery dates longer and longer, right? So order flow has reduced, but we think that what we see now is more of a sustainable order flow, and replicating what happened last year is not going to. Last year, when I mean to say 21-22 is we all knew that it was not going to happen, and of course, because we have this stable outlook, and please do take into account this last 6 months, prior to Jan 23, we had the spinning industry in itself was having a lot of challenges with respect to the cotton prices, the spreads. So it was not a very smooth sailing, I should say, for the spinning industry, and we had taken cognizance of that as well. So now we feel that the industry is coming back. We are seeing the order flows are happening now, and this would sustain. With respect to the capex, the way we operate is we have to bring it to a particular level, and then the way scientifically we look at all the options as to where the balancing capex is needed, then we invest. So last year we had invested close to around 60-65 crores in purely the machinery side, and we will be replicating that is of TMD alone. We are talking about around TMD alone. And company as a whole, of course, we had invested close to 100 to 110 crores on machines alone. So we're looking forward. We will be replacing. We will be bringing in some more capex to a similar for a similar value. I mean, that's the idea, and this would happen both TMD and MTD. But ideally, the thought process is to keep the utilization as high as possible as currently it is today. Peak revenue, I mean, If you ask me, we would say already we are there. We are trying to incrementally keep nudging the turnover higher and higher. But for the capacities available, we are already at the peak revenue. And with respect to machine tool division, actually the challenges what we spoke about on the electrical electronics actually is applicable for textile machinery division. And if you see what has happened over the last full year, we had the geopolitical crisis, the war which has happened in February 22, and subsequently the pricing has gone up, the challenge on availability of material, and to this day, yes, electrical electronic component continues to have that challenge. And we are working overtime here. Our supply chain management is doing all what it can to ensure that our supply chains are kept up and running and we are able to deliver the machines. I mean, that issue has not gone away. And on top of the fact, there has been a consistent cost increase also on these parts. So there is both impact. The cost and the availability both are a challenge as far as the TMD business is concerned. As far as MTD business is concerned, we don't have that challenge because these supply chains are different to that of TMD. We are relying on a different geography as far as machine tool is concerned, and that is already de-risked. And the utilization as far as machine tool is concerned is a lot, like I already mentioned for the previous question, and we have at least 30 to 40% possibility to scale on the turnover, because that's the kind of capacities what we have for machine tool business. And that's the kind of investment what we have done, which I already mentioned. Okay, back to the moderator, please.
Thank you so much, sir. Thank you so much for answering to that as well. So going to ahead with our next person in the attendee with the hand raised for the question, we have with us Forum. We have you unmuted. Can we have your video with the for the question, please? Can we have your video turned on?
Video won't be possible. So congratulations on a great set of numbers. So I'm new to the company, so please pardon me if my questions are naive. But so does this mean that your order book you said is 5,900 crores? So does this mean that we've had order inflows of around 500 crores this quarter?
I am not sure where you're getting that number from, ma'am, but I'll do one thing. Kindly ask all your questions and then let me reply one by one, ma'am. That will be easier.
I have many questions. Okay.
Yeah, please go on, and then I'll make a note of it. I'll reply. Not an issue.
Okay. On the order book side, I'm getting that number from, like, last year we had 6,500 crores of order book. Last quarter. This time we did sales of about 1,000 crores. So that is how I'm calculating that number. The second question is, we've seen some decline in our gross margins this quarter. And we are seeing that a lot of commodity pressure is easing. So what is the reason for that? Second, the third one is, so where would the demand where is the demand coming from? Is it from the spinning companies or from the garment companies that are going for backward integration? Would want to understand that bit. And in one of the calls, one of the spinning calls, it was mentioned that the spindleage capacity of India is at 90%. The utilization is at 90%. So just wanted to understand at what level of utilization would we see, capex happening, and how has the spindleage capacity moved over the years? The next one would be, could you just give us a breakup of the machines sold this year in terms of the spinning, yarn, and the breakup that we used to give? So what would we are contractual employees for this year, and how do we plan to utilize the cash that we have on our balance sheet? Thank you.
Okay. Ma'am, with respect to the order book, the way we look at it, and you're looking at two things, right? You're looking at the turnover, but when you talk of order book, we only talk of domestic order and LCs on hand, what we have at that point in time. So it is very difficult to just add it back to say, okay, X minus Y and then come to a particular number, because this 1,000 crores is including of spares orders, which we don't take. And it could be also of some cases where exports could have kind of come in. So the way we operate on the order book is overall the domestic orders plus LCs only, which is where I said it is close to 5,930 crores. Within that, I also gave the number of what is active, inactive, and what is the export split. With respect to gross margin, thanks for the question. I think it will also help me to explain a little bit in detail what has happened. Like I already mentioned on the geopolitical situation in post-April, we had seen such a surge on the cost of material. Yes, you're absolutely right. The cost of material has gone up, and then subsequently it has gone down. But if you had to actually see the cost of material which has gone down, it has not come back to the levels where what we saw pre-COVID. And so we are still talking about be it steel or whatever it is, it's in the high 60s and 70s per ton. So the issue to address here is the fact that while the cost has gone up and it has not come back down, we have also not revised our pricing the whole of last year. And we did take cognizance of the fact that we could not, because post April, May, June, and including the second and the third quarter, the spinning industry in itself was not doing great. And subsequently, in the current month, when the industry is looking a little bit better, we had taken a call because again, 1 year we had waited, in fact, a little bit more than a year, because our previous price increase was in December 21. And we had waited till May to actually revise our prices on TMD machines, which we have done and we have communicated to the market. That's what we could do. So the gross margins have reduced on account of cost of products going up, and we had taken action in the month of May. Apart from this, I already clarified on the electronic parts, that availability and the price both are a challenge today, and we are working towards it. So this is the kind of impact what we are having on the gross margins. With respect to where the demand is coming from, we have seen the pattern shift. Whilst last year we had seen perhaps 70-75% project orders. This year, whatever order has come in, we are seeing close to 40 to 42% in terms of project orders and 60% in terms of unitary machines, modernization. Those are the orders what we see. And it is very difficult to put an exact number at what utilization or what capacity the orders would actually come in, because of the reason that generally when the market is a little bit dull, especially when a project order is getting executed, everything is lined up, land, building, loan, from the investor's perspective. And generally they continue to install, and during a lull, they continue to finish everything and wait, and it is always a cycle, and then they can be completely prepared for the the demand as it comes in. So it is very difficult for us to quantify the order flow as against utilization of a mill. And With respect to the number of the employees, we have close to 3,400 odd employees. That is both all staff and workers put together. And contract, perhaps we should have a similar amount of people on the contract, on subcontracts and everything else. With respect to cash on the balance sheet, I think you have seen the results. We have declared a very healthy dividend this time, and we look for further investment in capex and do whatever is best decided by the board.
Thank you so much, sir. Thank you.
Thank you. Back to you. Yeah.
Proceeding with the next person on the list, we have with us Josefa J. Katlariwala. We would request you to please turn on the video for the question if possible. And you have been unmuted. Can we proceed with the question, please? Josefa ji, can we proceed with your question, please? Sir, can you hear us? Sir, would you want me to proceed with the next person on the list?
So yeah, I think he's on mute. I think Mr. Josefa, you're on mute. I think that's.
Can we request the technical support team to unmute him?
Actually, I can't because he has the right to unmute himself only.
Okay, perfect. Thank you.
Okay, I think we'll move to the next one and we come back to him, please, before we close.
Sure. Proceeding with the next person on the list, we have with us Mr. Manish Goyal. Sir, we have unmuted you. And can we have your question with the video, please? Mr. Manish? Yes, sir. Now you're audible.
We can hear you, Mr. Manish. We can hear you. Please
How are you, sir?
All well, Mr. Manish. Thank you. And how about you?
Same here, sir. Thank you so much. I have, sir, a few set of questions because I'll ask them all together. Otherwise, moderator will mute me. So first is on machine tool revenues. This quarter, we have seen flat revenue growth and margins continue to remain weak. If you can probably let us know what's the reason. And on TMD, you gave a breakup. So was it a breakup for Q4 or FY23? Maybe if you can clarify that and give it separately for Q4 and FY23, both put together. And whatever numbers you specified, if I look that, it implies that sales of spares have declined significantly. So maybe if you can clarify that and provide the outlook for that as well. And order inflow, okay, you gave us the breakup between projects and unitary machines. Sir, as per cash flow, we see a capex of 274 crores in FY23. And you mentioned that we have done 110 crores towards machinery. So maybe if you can clarify, because I see the jump in the textile machinery division as far as segmental is concerned, the large part of increase. So maybe if you can clarify that. And we have seen improvement in subsidiary performance both in China and Dubai. So maybe China, if you can give the revenue number again on a comparative basis on profits and the revenue. And how do we see performance in the subsidiaries and what is the order book in China and Dubai? And other income has also jumped significantly. So I believe, is there some one-time income or gain? And just now you mentioned we have taken price action in the month of May. So is it that we have taken price increase in both textile machinery as well as machine tools? If you can provide more clarity on that. Thank you so much, sir.
Yes, thank you, Mr. Manish. I'll take the MTD thing first and then we'll come to TMD, right? With respect to MTD, the revenue is of course flat, but the margin, the revenue mix is kind of changing, right? So we have got turning centers and machining centers, and the margin impact of this particular change is the reason the margin is kind of reduced. We are able to pump and push out more machining centers, which addresses the non-auto segment, and that is kind of reducing the overall margins as far as the machine tool division is concerned. And we would like to continue to increase the turnover on machine tool. I mean that, and because of that, what we had done last year is we had built the second facility for machine tool division. Whilst we have built the second facility for machine tool division, we are able to see the offtake increase from that division. So two things are impacting. One is the product mix, and one is the cost, which we are kind of taking in currently because of having the second facility for machine tool business. I think that is the reason we are seeing machine tool margins are quite flat for the current year. Or rather, it's little reduced compared to the previous year. With respect to textile machinery division, I'll give the numbers again. I think domestic was 64%, exports was 24%, and spares was 11%. And this is for the full year, and for Q4 this is almost a similar number. It is no different compared to the full year. And you are absolutely right. The spares as a percentage has reduced from what it used to be, and that is to the reason that last Q2 and Q3 were not great for the textile industry, and we had seen that reflection in terms of the offtake of spares and things related to that. That's the reason the spares turnover as a percentage of overall turnover is reduced. And with respect to the, I'll also cover China. The China is 272 crores as far as the current year is concerned, and last year was 222 crores. In current year, the profits are close to 23% in China, as against a break-even last year. What had happened was that last year we had, that is 21-22, there's a huge surge in, if you remember, the FOB cost, and since, the logistics cost. And since the contracts were all, including logistics, I think we had an impact there. But however, our current shipments within China are all FOB, and that has resulted that the turnover has gone up, and we have also done a decent margin there. With respect to order book in China, we have an order book for a quarter. For the upcoming quarter in China, we don't have long order books like what we currently have here in India. And of course, today we are able to send people more freely to China. In fact, if we have been following, and we have been till November 22, we could not actually have our people freely move because of a lot of COVID-related restrictions. But subsequently, thanks to the efforts on both sides, our people have reached, and we have our expat people also there, and we hope to continue with more order intake, and we have been able to send our sales teams all into China at the moment. With respect to the other income jump, the one-time income was the sale. We had disposed of older aircraft, which we held for 18 years, I think 17 years, and that is one item there, and the value is close to 24 crores. And the capex, 275 crores of spend. The rough breakdown on that is around 110 crores of machinery, and we had another around 86 crores of an asset purchase, which is our aircraft, second-hand aircraft, which we have purchased in the month of September. And then we had invested in building, that is the MTD building, that is the second unit, what I just spoke about, we are invested in that. So that is the reason the overall capex stands at around 275 crores. And with respect to the price action, I think the question was whether we have done it for both TMD and machine tool. We have only done it for TMD. We have done it only for textile machinery division. As you know, only in textile machinery division we have fixed price contracts across the domestic market, and of course the export is a negotiated price. So this impact is only on textile machinery domestic segment, where we had not changed because the previous increase to this was in December 21. That was what was the previous price increase, and we have not touched it at all whole of last year. That's what it is. I think I've answered all the questions. Okay, back to you, moderator.
Thank you so much, sir. Thank you. Next, to proceed with the next person who has raised the hand for the question, we have with us Mr. Nitin Raheja. Mr. Nitin, you have been unmuted. We can go ahead with the question along with the video if possible. Thank you.
You're on mute, I think, Mr. Nitin, or I'm not able to hear you, sorry.
Hi, can you hear me? Because I've unmuted myself.
Okay, I can hear you now.
Yeah. So I have a follow-up question to my colleague Varun Basrur. You talked about the fact that at the current capacity in the textile machinery division, you are at peak turnover, and any incremental growth will come from debottlenecking. If that's what you mentioned. So just to understand, considering our order book and what tenure over which this order book has to be delivered, and B, and maybe you talked about it and I must have missed it in the first part, and the second part of the question was post debottlenecking, what kind of peak turnover would that help you to achieve?
Okay. See, the delivery period today is anywhere between, you would say, depending on the type of machines, between 9 months to 16 months, right, or 15 months. The existing order book is again a mix, right? I mean, certain projects when they start, there's a sequence in which we would like to deliver, and they keep going in that kind of a sequence. You can always shuffle in between in case there is a unitary machines. So our capex plan is. It is not to say that, okay, this is what we would like to achieve and then we just increase the capex, because we know, and as what we have seen, this was again asked quite a few times over the last year when we had a huge surge in order book, to say why we are not expanding capacities instead of delivering 18 months and 20 months, why can't we shrink everything to 12 months? And we always maintain that our industry always runs in ups and downs, and it has its own cycles, and that's what we could see even Q2 and Q3 of last year, right? Sure. So that's what happens. And we are very much aware that this is the cycle. So what would happen is they will say, okay, push mine out, we'll come back later, we'll take a few machines, we'll not take the entire range. All these things happen. So we are very sensitive to this. So whilst we try to keep within a reasonable time the delivery period, at the same time, depending on the really, I would say, long-term view, we add capex. And last year we always said balancing capex. Now that has been to a large extent done. Now we'll see, okay, which are the ones which are actually giving us the longer lead times, right? And that is where we would like to go and invest. And of course, we can't share which are the ones which are having the longer lead times, but that is the scientific way of doing it. So then you can, on an even basis, try to reduce the time of delivery to the customer. I hope that answers the question.
This is a part of the 400 crores that you mentioned over a 3-year period. This would include that.
I think that 400 crore was basically ATC order book.
Okay.
I was talking about ATC when I was talking about ATC order book, which for execution. CapEx it comes yearly. I mean, as a policy, we always have had that depreciation is always invested, but in situations like this where we have got an order book to deliver, then of course we go, just whatever I explained is what we do.
Okay. And so commensurately with this change, if you have to see what kind of growth or incremental peak turnover would we see in the textile business?
Okay. I mean, we have seen right now around 20% over the last year. So it will be a creeping incremental turnover increase as the capex comes in. That's what it is. We are not going to see because it can go only step by step. It is not one shot. We're going to see another 20% jump. It doesn't work like that.
So you're saying it's not like you see another 20%, but it will be more creeping, like as you said.
Yes. Efficiency has to be driven, and that comes in as a creeping increment.
And in terms of the machine tool business, because there you said you have capacity, there you will probably see the faster.
Yes, we should.
Okay. And I mean, it's one of the oldest companies, has been one of the most well-run companies and businesses in the country. But from a cyclicality perspective, is there a thought process in terms of how this company should look, 3-4 years from now, where you have sort of diversified to prevent the kind of cyclicality that we normally see in the textile sector?
See, textile sector comes with its cycles. I mean, those cycles, and if you follow us over just before I start off, is there any other questions which I should note down so that we can answer them together?
Sorry, not from my side. I'm done.
Okay. See, textile sector, then I'll take this and complete. So textile sector comes with its own cycles, right? And we have been seeing this over the entire lifetime of what it is. But I think on the machine tools side, things are only growing now. Things are actually with the industry growing and with so many things have come in, PLIs have come in, +1 factor. They also talk about -1 factor. So all of them are kind of indicating towards a very healthy growth over the next few years, I would say, as far as the engineering sector is concerned. So that's the reason we have felt that this is definitely an area for us to kind of invest in, which we have done. With respect to total diversification out of this, I mean, that is of course up to the board, but we are an engineering company. We pride ourselves in bringing the latest and the most advanced technology to both the industries of CNC machines and also to textile machinery spinning segment. I think we continue to do that, and on top of this, there is also space for us to grow within the textile spinning segment, where we have new machines which we introduced, new automation products which we have launched. And on the machine tool side, there is ample scope for us to expand on the machining centers right now, where we don't have a very large market share there. So there is an ample opportunity for us to expand there. So given our core focus I think there is ample scope for us to be focused on this area to kind of continue to expand and gain market share and also expand the footprint of our business. Thank you. Back to you, Mr.
Thank you
Samir.
so much, sir. Yes, sir. Thank you so much. Thank you. Proceeding with the next person, we have with us Mr. Rushabh. Mr. Rushabh, you have been unmuted. Can we proceed with your question, please?
Yeah, am I audible?
Yes, sir.
Yes, Mr. Rishabh, yes.
Yeah, hi, good evening, sir.
Good evening, Mr. Rishabh.
Yes, sir, I had three questions. So first of all, so you mentioned there's a lot of opportunity in MTD. So just want to understand, suppose if I want to look at a broader picture, say market potential of ATC plus MTD, is there a possibility that the next 4-5 years can they become 40-50% for top line? Because currently we are 85% from textile division. That's question number one. And second question is, has the ATC division has it come to a inflection point wherein we can scale exponentially, consistently, and profitably on year-on-year basis? Second thing is that, and my last question is, we were talking about some strategic and financial investor in the aerospace industries for which you have created a separate entity. Any update on that and what kind of investor are we looking to onboard? These are my three questions.
The machine tool industry. Let me take these two as two separate things, right? Machine tool industry is growing. I think that is the sum and substance, and we have been growing along with the machine tool over the last. I mean, if you take the perhaps 10 or 12 quarters, or a little bit more, we are seeing machine tool having a consistent growth trajectory. So, considering that we have invested and we feel that there is definitely enough possibility to grow in machine tool. Now, the one thing in machine tool industry is it is more of an assembly because most of the components are bought out, right? So we are in a position to expand our capacities in a very planned manner. What we basically do in machine tool industry is that we have to address different segments of the market, and that is where our R&D and everything is spent as far as machine tool business is concerned. Can it grow? I think there is all the possibility for it to grow. Can it grow to 40%? I don't think we can give you any of those projected numbers here. But definitely, we have repeated and we have also said that yes, we have capacities, and the idea to build capacities that there is a room for us to grow, and that is why we have been investing in this particular business. With respect to ATC, I will ask Madam Lakshmi to take that question. She will reply for you now.
Mr. Rishabh, as you see that Advanced Technology Center turnover.
Yeah,
as you see, like ATC turnover has increased from 95 crores to 39 crores, giving around 142%. This itself indicates that out of the 400 crores of order book as on hand we have, there is quite a possibility for execution because now we see the opportunities which are just on books coming to us. So as on the strategic partnership or tie-ups and sign-offs, nothing is as of now crystallized. We are still with NCLT waiting for the order for demerger.
Back to you, Mr. Samir.
Thank you so much, sir. Thank you so much for answering to that. And thank you so much, ma'am, for answering to that as well. Next person on the list we have with us, Mr. Ritwik Sheikh. Sir, you have been unmuted. Can we have your question with the video if possible?
Yes, Mr. Ritwik, you're audible. How are you?
Good, sir. How are you, sir?
All good, all good.
Yeah. I have a few questions.
Please go on. You're not audible, Mr. Ritwik.
Is this better?
No, Mr. Ritwik, you're not audible.
Mr. Ritvik, the audibility has gone down. The volume has dropped down significantly. You are barely audible.
Hello. Hello.
Mr. Ritvik, you were audible in the very beginning. I don't know, like, did you change something? Like, did you put your system away or did you move away from the system a bit?
Am I audible now?
Sir, you're barely audible. The volume is way too low.
I'll get back in the queue.
Okay. Central Sir, with your permission, we would like to take Mr. Ritvik once he's ready again. Going ahead with the next person on the list, we have with us Mr. Amit Shah. Amit sir, you have been unmuted. Can we have your question with the video, please? Amit sir, I believe you have muted yourself.
Yeah. Am I audible now?
Yes, sir. Thank you.
Yes, Mr.
Yeah. Hi, sir. So my question, first question was on the TMD side. You said you have taken a price hike in the month of May. What is the quantum of price hike in that particular segment? Secondly, does this price hike is the price hike sufficient enough to take care of the cost increase that we have witnessed over the last 1 year? And can the margin bounce back to double digit? Third question on the TMD side is that your order backlog has come down to 6,000 odd crores, and out of that, almost 1,000 odd crores is inactive orders. So we have somewhere around about 5,000 odd crores for the execution which is available. With this kind of an order backlog, what is the kind of growth that we can expect in TMD division for FY24? And lastly, on the TMD side, we had launched this auto corner machine. So what is the status of that? What is the kind of sales that we have been generating? I suppose that is somewhere around about 1,500 odd crores market. So if you can just highlight on the market share gains. One more question from my side was on the capex side. So what is the kind of capex that we are planning to do for FY24? Which are the areas that you would be investing into? And on the MTD side, you suggested, so if I look at your quarterly run rate of revenue on the MTD side, it has been very flattish of 250 odd crores for the last couple of quarters. So what is the kind of growth can we reach to say 300, 400 crores kind of a level on a quarterly basis? So if you can just highlight on these points. Yeah, thank you. That's it from my side.
With respect to TMD, the price hike, what we have done is closer to around 5 to 7%, depending on various types of machines. Yes, the idea basically is that we should go back to margins. We should get back to our margins. I think that is the very purpose that we have whilst we have absorbed as much as possible the last year, all the increased cost. And I think since the markets have also stabilized at the moment, and we have done this to start get a higher margin. We have to claw back our prices. With respect to the order book, I'm not really able to understand the question between 6,000. Yes, it's around 6,000 crores with 1,000 crores of inactive orders. We will see even this every year we see an order inflow, so that order book will get replenished, and the growth in FY24 is going to be based on whatever we are able to kind of ship out, and that I have already answered. With respect to auto corner machine, it is not yet commercially launched at the moment. We did mention last time that as we launch it, we will keep you informed. As the machine start commercially getting launched, we will keep you informed. The capex side, we plan to invest a similar amount, because already we spoke a lot about capex. We are going to look at further reducing the length and see what is the bottlenecks, and we'll be investing there. So we see a further investment as to what we have done in FY22-23 between both capex of MTD and capex of TMD. We should be again closer to 100 plus crores as far as capex is concerned. MTD, yes, the industry has its own challenges with respect to the auto segment, but the engineering side is doing well. But the auto segment again doing various the passenger, the non-passenger segment. It has its own challenges at the moment. But like we said, we have capacity to do what you have asked, where you are indicating close to 300 odd crores a quarter. I don't think that's a challenge for us. It's only how the market is and how we are able to establish our market share within these segments where we are currently operating. I hope that answers all the questions. Back to you, Mr. Sunil.
Thank you so much, sir. Thank you so much. The last person who we would like to take is Mr. Ritvik Sheth. He is back with us. Mr. Ritvik, we would request you to please proceed with your question.
Yeah, am I audible now, sir?
Yeah, yes, Mr. Ritvik, you are audible.
Yeah. Hello, sir. So most of the questions have been answered. Just two questions. Firstly, just extending the previous participant's question on the machine tool division. We are about 250 crores per quarter in the last 6 to 7 quarters. So is it that we have lost some market share? Because it seems that despite having the headroom to grow, we are in that range only. And so my second question is on the textile segment. Current installed base is about 58 million spindles in India, 59 million spindles in India. Now, what is your sense on the outlook for this? What kind of growth can we see on this base? And generally, as a thumb rule, what percentage of this comes for upgradation every year? These are my two questions, sir. Thank you.
Okay. I think pretty much we covered most of it, Mr. Ritvik, but still let me try and answer on this headroom of machine tool business, right? See, the order execution and capacities are two different things. So whilst we have got our capacities done, yes, we have to get the orders for execution, and that's where we covered areas between turning centers, machining centers. We have market share, quite a large market share in terms of turning centers, which is closer to around 25% to 27%. And with respect to turning centers, we will be in closer to a higher single digit in terms of machining centers. The idea basically is we need to get more of these machines out there, and that's where we talk about the capacities, and that's the reason we have that headroom out there. It is not for lack of orders. It is that we are creating more headroom than what we should be in a position to what we have been supplying, and that gives us that flexibility and that leverage to supply more as the demand comes in. With respect to the spindles, India perhaps for the last 2 years has absorbed a little bit more than between anywhere from 2.5 to 3 million kind of a spindle is what it has absorbed. And this is what we cover in the project versus unitary. The unitary machines are the ones which generally come up for replacements, and projects are basically new projects. And like I said, perhaps this year, what we have seen is since a lot of project orders were already placed in 21-22, this year we had seen closer to 60% being upgrade kind of a scenario compared to last year only 25% being upgrade and more of it being project orders. I mean, that also we had covered. Okay, thank you. Back to you, Mr. Samir.
Sir, thank you so much. Thank you so much. I believe all the questions have been answered. There are no more hands.
I think Mr. Josefa, I think we couldn't get him to talk.
Mr. Josefa, I checked. He's not part of the attendees anymore.
Okay.
He probably left the meeting. So if at all, if any of the attendees, if you think we missed your question, you're always free to put those questions down in the mail. And this brings us to the end of this meeting. Sir, with your permission, we would like to conclude the same.
Thank you. Thank you. Thank you, everyone. Thank you for attending.
Thank you so much, Senthil sir. Thank you so much, Lakshmi ma'am, for answering to all the questions. Thank you so much, all the attendees, for being with us. Thank you so much, everybody, for joining with us at this meeting. Thank you so much. Thank you.